The only source of knowledge is experience. Albert Einstein. Think about that, my friends. Albert Einstein, who is known for the theory of relativity, tells you that the only source of knowledge is experience. Well, I agree with Dr. Einstein, and here is why. Because every single day we see the results of 10 to 15 minutes of experience in increasing our knowledge base on how to follow price movement. And that is what we do here. We trend follow. Our trend following is accurate over and over and over again. Is it accurate 100% of the time? No. Anyone who tells you that is a liar. Why? Because we can't control the world. You can't forecast the future perfectly. But what you can do, just like for those of you who surf, I live here on the beach. And when you get out in a wave, you can see that wave coming. You can predict it. You can paddle into it and up on it. 9 times out of 10, you're going to get that wave. You're going to ride it. You're going to be able to manage that power. Sometimes, though, the ocean's just crappy and the wave just dies on you. It doesn't peak properly. And that's because of all the other waves around it that can kill it, that can deaden it, that can screw it up, and again, make it not work. That happens. That's why we use profit and loss bands. That's why we backtrack to make sure that the charts we are using work on the security that we're tracking. And again, you learn all of that one way. One way. Albert Einstein told you the only source of knowledge is experience. 10 to 15 minutes a day, that's all we ask. Hey, great training for you today in your show notes, how to chart Bitcoin. Those of you who followed us through that, all of that extra training we did live on the show last year after we finished our main charts, we went through what? We went through Bitcoin, we went through real estate, we went through oil, and we went through silver. And again, we were there to help you learn how to chart those. Bitcoin in particular, that chart is wonderful. It has been highly accurate. That 2-day recross we recently had would have gotten you into a practice trade on Bitcoin at the $21,000 mark. And of course, it reached a high so far of $40,000. Is it time to get in now? I think you might be a fool. Again, practice trades are hard to jump into, like catching a falling knife. It peaked at 40,000. It opened this last Friday. And when we start looking at lows and all, now again, this, when I say last Friday, we're talking about where Bitcoin was on our charts for the week. Where did it open during the week? It opened at 23,537. It hit a high of 40,000. And where did it close? At 34,784. And again, Bitcoin doesn't track like stocks do. It is traded differently. When I say track, it's hard for me to give you where it is at any certain point during the day. But those are openings, closings, highs, lows. And again, that's what we're looking at. And the accuracy there is amazing. And again, we chart charts that work, and Bitcoin has been working. Let's jump into our standard charts. The S&P 500 up for the day 0.57%. And look at this week. We're reaching a higher high. We've got a candlestick itself that's above the prior candlesticks. Price percent oscillators pulling away from the red signal line. You know how the week started, how things had looked, and how they changed, and how they ended up. And again, the reason we pay most attention to our bigger charts is all things being equal, the market tends to move in the direction of the largest chart, which is our weekly. Derivative oscillator gaining upward momentum. Price percent oscillator pulling away from the red signal line. 2-day chart, did we cross over? We did not. We got awfully close, but we did not manage to do it by the end of the day. Just did not quite happen. So what does that mean? That means that we simply wait. We don't get greedy. Remember, hogs get slaughtered. What do we see going on with the half-day chart? Again, up in the morning, losing a little bit of that in the afternoon. But again, price just above that half-day trend line, price percent oscillator heading up, derivative oscillator heading up. So we'll keep our eye on the prize and see how the week goes. As we jump into the new week, go ahead. Hope you're filling out your weekly market worksheet. That's what you ought to be filling out now, and you're going to put a note in there to pay close attention to what happens on that 2-day chart, particularly at the close of the market on Tuesday when that next 2-day candle will be drawing if you have a jumping in point. That's where we are on the S&P. Let's go to the Qs. We see on the Qs pulling away from the red signal line at the end of the week, derivative oscillator gaining upward momentum. It's on the weekly chart. We can see a higher high being reached, a candlestick itself being higher than the prior. That's good. 2-day chart crossed over, pulled us out of that trade, going down. However, it has recovered. What have we done? Well, it didn't cross over, didn't have a 2-day recross, and we are not jumping in just yet. We'll see what this market has to show us over the course of this next week. Derivative oscillator still negative, price percent oscillator negative. Again, mark your market worksheet, your weekly market worksheet to say, hey, check out the Qs at the close of the market on Tuesday when that latest 2-day candle forms. We see how things moved up over the last 2 days after pulling over and pulling us out of that prior trade on the half-day chart. Why do we follow our rules? Because invariably, my friends, our rules keep us safe, and we have our rules because our rules work, and they work time and time again. Don't get greedy. Follow the plan. Let's leave stocks, go to bonds. What do we see going on in bonds? Bonds down for the day, 0.3, having a hard time reading that, 0.32%. And of course, we have a red down candle for the week, little wick on top, but overall, look how much it plumbed down. Look at that hockey stick as far as the price percent oscillator pulling away from the red signal line, and look at that big derivative oscillator. So lots of down movement still going. 2-day chart. We had that 2-day recross jumping in point somewhere around the 155 mark to a low over just 2 days of 150.66. Not bad, my friends, not bad on shorting bonds. How many of you pulled the trigger on that 2-day recross back at the end of the day on Wednesday? How many of you went into a practice trade on TBF, which is the inverse fund for 20-year treasuries? Of course, this price is lower per share, but again, it's set up by the market makers who run this. It's set up to basically earn the same percentage going up as the 20-year bond fund, TLT, is going down. That's what inverse funds are all about. I'm going to put our inverse fund training at the end of today's. It's going to be on your video screen, and it's going to be inverse funds, how to make successful practice trades when markets crash. You need to know that. Also puts, if you are a Patreon supporter or would become a Patreon supporter at any of the 3 levels, you get our 3-part training options made simple, the Charting Wealth way, the best options training in the marketplace. We want you to have it. So that, my friends, is where we are. We look at the half-day chart, and of course, it has been tracking down in the morning, a little bit of a recovery in the afternoon, so it didn't close as low. That's where we are as we end bonds for the week with a successful 2-day recross so far. Hope you've set out your profit and loss bands. That's another one for me to put in at the end of today's training. How to use profit and loss bands. That is a big one, because remember, you jump into any trade, what you have already decided is the profit you're going to be satisfied with. You can change that, but your loss, you go ahead and lock in the loss that you will sustain and otherwise get out if you don't see things move in the right direction. Now, we're going to move on lastly to gold. What do we see going on with gold? Well, we ended the week with a green up candle. However, the price percent oscillator still negative. We saw gold down for the day 3.44%. Daggone it. After gold started off so swimmingly for the week, it just lost it. Why did I tell you to wait before jumping into gold until the end of the week when it looked like at the beginning of the week it was going to cross over going up? I said, wait, watch, pay attention. The reason we have our rules and the reason we don't call a weekly candle complete until the end of the week is because it's not. And things can go sideways on you. All things being equal, the market tends to move in the direction of the largest chart. And guess what? As the week ended, it did. It pulled back substantially. If you would have jumped in prematurely, you would have gotten slaughtered because you would have been a pig. Now, we see the price percent oscillator pulling away from the red signal line. Derivative oscillator losing downward momentum. We go from the weekly to the 2-day. And what do we see on that 2-day chart? Let's, for a second here, let's see if we can redraw this chart a little bit better. It's hard to. Well, we'll do what we can. Let's look at the 2-day chart. It's just weird when you have that kind of up movement after the preceding down movement and no crossover. So it just makes it hard to draw an accurate line, but I want to have something there. So what do we see on the 2-day? Well, that's where we see we had that 2-day crossover going up, which took us out of the gold trade down. And of course, gold is cinched up. Now we saw this peak on gold back on our 2-day chart on Monday, and then started losing Tuesday, Wednesday, and then Thursday, Friday, huge big down candle. Price percent oscillator heading down. If we have that, mark this in your market worksheets, your weekly market worksheet. Watch for the closing of the 2-day candle on Tuesday. If you do have a 2-day recross going down, that's when you'll want to short gold. That's when you'd want to, again, practice trade, purchasing some puts on gold potentially. Watch, keep that in mind. Mark your weekly market worksheet. Make sure you're watching gold toward the end of the day on Tuesday for a potential jumping in point. Lastly, we can see where the market slammed down in the morning, further down in the afternoon on gold as it just lost it. It actually started losing it after peaking on Tuesday, down Wednesday, sideways. I guess that was down Wednesday, sideways on Thursday, hammering down on Friday. Folks, that's where we are as we end the day. Thank you so much for being with us. If you don't have our book, Charting Your Way to Wealth, you need a copy. I sent out autographed copies today, and I've got one for you. We're working on that 3rd edition. It's going to be an electronic version of the book right now. Of course, we've got a hard, we've got a real book to send out to you. Everyone who buys that book, everyone who's bought that book will get free of charge, as I did it with the 2nd edition. You will get free of charge the electronic version. So no reason not to buy the hardback copy now. It's going to take me some time to get this latest version because we're going all out here. I'm recording videos. This is what I call a high ebook, a hyperlinked electronic book. So it'll be linked to videos, graphics, definitions, all sorts of stuff to make it the ultimate training tool. But in the meantime, stay with us 10 to 15 minutes every day. Buy the book, support us at Patreon. God bless. All the best from the whole team at Charting Wealth World Headquarters. God bless.